As tech stocks continue to crumble and the rotation into defensive stocks just continues to chug along, do I consider this to be the beginning of a bigger correction where it's just going to continue going forward? Stick around, today's going to be a great video. Hello, my YouTube friends. My name is Adam Kahn, and this is Dividend Retirement, my new channel that I'm going to try to promote a bit and see how things go. I'm really happy to see how it's been going so far. I know that may look strange considering we only have 25 subscribers, but I'm actually excited about that. I like seeing the beginning stages and I like growing things, so it's kind of cool to watch it chugging along as I continue to upload and put in videos. Anyway, do I think that this big correction is going to continue? I actually don't. I do over the long term. I think that we're going to see a rotation. I think the market's going to broaden out and you're going to see it spread into the dividend stocks and the things that have been neglected for years. But I actually think there's enough panic out there. I think there was yesterday. I try to even see it in myself where we've broken through these trigger levels that feel like it's really going to crater at this point, even Bitcoin. But I'm beginning to think it's had its move and it's creating some real opportunity to potentially get into things. Now, as always, this is not financial advice. Please, you should not be listening to me. I don't really think you should be listening to too many people on YouTube. You really need to do your own research when it comes to making investment decisions. I am not a professional financial advisor. I'm just sharing the things that I've done over the years and the things that I look at because I really enjoy markets. I like watching these things and I like discussing it as well. Now, since I'm new and maybe some of you are just finding the channel and don't know who I am, I'll give you a little bit of background and where my investing journey began and where I am now and why I've changed the channel and why I call it Dividend Retirement. So I grew up in New York, in the suburbs. I ended up moving to Chicago after college, and then now I'm in Las Vegas. But I started hearing about the markets when I was really young. I was kind of fortunate in that way that I even have these memories of my mom discussing things. Like, I remember the first time sitting in the car, and I don't know if I was like 8 or 10 years old or if I was older, and it's just this memory of being really young and I was 12 or 15. But I remember her talking about, never putting less than $1,000 into something. Now, keep in mind back then, the commissions that places charged were extremely expensive. I remember putting my first trade in at Smith Barney, and I think the commission was discounted down to $200 or $300, marked down 50% from like a $500 fee to buy 100 shares of a 40 some odd dollar stock. So here I am putting in about $4,000 or $5,000, which was a lot of money back then, and the charge to make that trade was like 5% of the trade. It's part of why I think a lot of us who are a little bit older have this mentality of buy and hold, which is you had to really hold it for decades to justify the expense of even putting that trade in. And I'm guessing that's why my mom talked about putting $1,000 in. Now, I remember being pretty young and thinking about, oh my God, that is so much money. And not just the amount of money, but what started going through my head of this concept of, geez, I wonder if you can use that money to be able to live off, and you could take the money from where you were working, put it into the markets so that you could have this revenue stream so you don't have to rely on anything else. And that's always been my general goal and my love of the markets. Now, along the way, when I moved from New York to Chicago, I moved out there to work at the Chicago Mercantile Exchange, where my goal was to become a trader, and that is what I ended up doing. Now, when I was in college, I did an internship at Merrill Lynch, which the only thing I really learned there is that was not what I wanted to do, and it really left a bad taste in my mouth for something that was what I always thought I wanted to do. Was I figured I would go work for one of the big brokerage firms. I would find clients and open up accounts and help people manage their money. The problem is when I worked at Merrill Lynch and I kind of saw the inner workings of what really went on, that wasn't what I ended up wanting to do. What I noticed is most of the time, these memos would go out to the people at the desks who would then call their clients and tell them to buy the products that Merrill Lynch was telling them to buy. Now, I had this vision of I could study the different companies, I could learn about them, and I could give my opinion. And what I learned is, no, that's not really how it works. And not only is that not how it works, that's almost frowned upon, which is why I went a totally different direction. When I graduated college, I was super fortunate that my brother had already moved out to Chicago and he was working at the Chicago Mercantile Exchange and kind of said, "Hey, I think you should come check this out because I think you'll really like it." He loved it. We have similar personalities. So the next thing I know, I'm packing up my bags, I'm moving out to Chicago, and I'm going to the Chicago Mercantile Exchange to interview. So I meet with this guy, Elliot, at Lind Waldock. And I like telling this story because I think it's kind of funny, and it's always what I say the value I got out of college. Now, I don't know anything from anything, and I'm just trying to get a job down there because my understanding is you get down there, you meet people, and you can have all sorts of opportunities. So, interview with Elliot, I think it's going okay. He brings me down, he shows me the floor. He's like, "What do you think?" And I go, "I think it's great. I'd love to be able to work." And he goes, "Well, when can you start?" And I kind of shrugged my shoulders, and he goes, "You want to start tomorrow?" And I'm like, "Sure." And he looks at me and he's like, "Well, we normally start people at $5 an hour, but I see that you have a college degree, so we'd be willing to start you at $5.50. It's like, all right, I'm in. And to this day, I kind of feel like, well, my college degree made me 50 cents an hour. Now, I don't know if I could have negotiated. I was just happy to have a job. It was what it was. It was not good pay. I'm not one of those guys that's going to be like, well, but back then that was good money. No, just like today with minimum wage, it was not good money. It wasn't enough to really survive on. But we didn't have some of the expenses that kids have today. Like, you didn't have to have a cell phone. You could. Rent was really inexpensive, and I lived in a decent part in Chicago. Anyway, got me onto the floor. Within a year, I was already in a position to be able to trade. Now, I worked as a runner. Runner's kind of this job where you get a piece of paper, you bring it to the right pit, you hand it to the trader. They either execute it or they tell you okay, and you go back and you get the next one. And all day long, you're just grabbing these pieces of paper, running to the different pits. I was in the currency pit, so like you had to know where the D marks was, which is now the euro, the British pounds, the Canadian dollar, the yen, which is what I eventually ended up trading, and the Swiss franc. Those were the main ones that traded down there. There was also the Aussie and some of the others, but they're very rarely traded. Anyway, I went from being a runner to a phone clerk, which if you see on the TV, they're the ones up there like this. Sometimes you're holding two phones, answering it, and putting the hand signals in to the traders to tell them the orders. If you're touching your face, that's the quantity. If your hands are out here, that's the price, and you're essentially just communicating with the clerks in the pit who are then putting the trades into the pit. From there, I made a connection with an options trader who traded yen options, who was going to give me an opportunity to work for him. We had just different personalities and things didn't really work out, which ended up being really good. He fired me at the same time that my brother and I were trying to build like what basically we had decided that we'd raise some money from our job and keep putting in until we had enough money to back one of us, since he had been there longer and he had been trading for a company. The theory was he would go in first, and if he starts making money and doing well, that I would go in. Well, after I got fired, he received an opportunity from a company that would back him to trade, meaning they would put up the money while he was going through the process of like getting a seat and everything else. So he kind of calls me up and he's like, "Hey, you want to go trade?" And I'm like, "What are you talking about? We only have enough money for one of us." And he tells me about the opportunity where they'll back him. They have a split and we can use the money to start me trading. So I was super excited to allow me to start long before, like, I didn't expect to be in the pits trading for a couple more years. Unbelievable experience. Amazing how the advantages you have on the floor versus trading through the computer the way things are now. It's not what people used to think. It's not because of cheating or anything else that people thought would go on. The reality is just knowing the different players in the pit, it becomes rather easy to just follow the ones who really run the market, which are the big banks. Basically, there's like 4 or 5 big banks, and they have people on headsets all day long with New York. And while we were trading the yen against the dollar yen trades in New York, and they move in the opposite direction. So when JP Morgan, or primarily Morgan Stanley, When they're making their transactions in New York, they're pushing the markets in Chicago. And if I'm watching Bryce and he goes two bid, all I had to do was buy threes, and generally he would go higher and higher because whatever's going on in New York, they're pushing the markets. And you just kind of follow the leader. And once you get to know who's who and the different ones who kind of move the markets like that, it becomes rather easy to just kind of maneuver through things and manage your positions. Anyway, I loved it. It was incredible. Eventually, computers came around. People weren't really trading their trades in the pits. They were going straight to computers, and I had to transition. I ended up leaving the floor because business died down. There was nothing to do, and then I didn't really know what to do. I was still trading stocks. I had done really well. I was fortunate enough to save up some money. I bought some real estate as well. Actually, my wife and I sold my real estate in Chicago. We moved out to Las Vegas right before we moved in '05 when the houses were still booming, and they got ahead of us, and I said to her, I think we have to wait. We're just going to have to rent a while. So I sold my properties in Chicago. We rented here while we figured things out. I tried opening up a restaurant, but I was always trading along the ways. Eventually, what ended up happening, of course, the housing market collapsed, created an opportunity to be able to buy some real estate, and here we are today and where I am. Now, that's a whole long roundabout thing to get to where the video started, which is what's going on with the markets and what do I see going forward. Well, I do think that there have been a lot of stocks that have been so out of favor for so long that they were so overdue to correct. I think that some of it has been missed. I think that some of it is still down there, and anything that got ignored, eventually it's going to do okay and do just fine. When nobody cares about Conagra, I can't tell you how many people I've talked to about Conagra or Pfizer or what are some of the Verizon, General Mills, Kraft Heinz, that they Target, which I joke about on my other channel, which finally seems to be reversing after it fell down into the 80s. Like Starbucks, my God, there's so many of them. But when it becomes really difficult for people to like these companies that were just fine 10 or 20 years ago, tells me that they're out of favor enough that you're getting something on sale. Now, that does not mean it's any guarantee that it's going to just do incredible. These are boring companies that tend not to just have these huge growth over time. But when it's really easy to say, man, Amazon's awesome, Google's awesome, Meta's awesome, and everybody, it becomes really easy, like they want to go out and buy that stuff, odds are that's gone too far to the upside, and vice versa. When you can't convince somebody that Target is a decent company, it's probably gone too far to the downside. A great example is Boeing about a year ago or so, when the planes were crashing and the CEO was using it for personal use, and they fired the other CEO, and just everybody hated the company. Well, Boeing is a duopoly that probably is going to stay in business, and the government's going to support it. So I try to look for what I say bad news on great companies, and where it gets so out of favor that just nobody wants to own it. I find those create really good opportunities. If they pay a dividend, the reason I'm calling it dividend retirement is I am trying to slowly rotate out of the growth stocks that I've been very fortunate on the past 5 or 10 years, and slowly move that into boring old dividend stocks to be able to rely on those dividend payments to retire in the future. What's tough for me on a day like today is where I'm seeing value is the stuff that I'm trying to rotate out of, because I think it's getting a little overdone. The people that are super bearish, that think the economy is collapsing. And look, I did a live on my other channel yesterday, and I try to use my own emotions sometimes to get my opinion on the market, and I can tell even I was getting a little bit too negative. The world is doing just fine. We are not going through this huge, monstrous, everybody's losing their job. The AI narrative is something like things take a lot longer than people typically expect. Uber drivers are not going to be out of a job next year. Like, I promise. Like, forgive me. I know it's just estimates and can't listen to any of us. But even if it happens, it'll be similar, like that long story about computers coming around. Well, that took years before the traders were all really gone. And it just slowly happened as there was less and less business and more was going to the computer. I picture that'll be the same with AI, and maybe it disrupts a bunch of industries, and it's very hard to envision where things will play out and what jobs people will have. But my guess is, as time moves along, it'll be a slow transition and new jobs will be created and things that we don't even picture. Now, it is hard for me because this is the newest technology, or the first technology that is trying to replace human. It's not really trying to make us more efficient. It gets sold as that. But when I watch the robots running around the warehouses at Amazon and stuff, it's not really making people more efficient. It's trying to get rid of people and save on salaries. And I don't know what opportunities lie in the future for what those people will go and do. Same when I think of the autonomous driving and the visions that Uber and Waymo and the others have. Their goal is to get rid of the drivers and just work remote, just have the cars do all the driving and stuff. So what I really want to do is give recommendations on the dividend stocks and the things that I'm looking at, but they've run so far so quickly in this rotation move that I do think will continue, that I think there might be better pricing opportunities. I did notice that both T. Rowe Price and Prudential, which are two of the ones that I had picked up, had nice corrections today. T. Rowe Price reported earnings. They were like 2 cents worse on profits than was expected, which has driven the stock price down significantly. And they're paying a nice 5% dividend. And I'm okay putting a small percentage of my portfolio in something like that. The reason that I say it's not investment advice, I want people to understand as I go through this rotation journey, the percentages that I'm putting in is like 1% or less of the portfolio each time, because if a company isn't doing so great, I have concerns that that could continue going forward. But when the opportunities come that the dividend yields get really attractive because the stock has fallen, sometimes that's when the narrative gets negative. If I can pick up 50 equivalents of T. Rowe Price on the news like that, I'm guessing over time I will have a nice yielding portfolio with a bunch of companies that do just fine, and a few that do poorly, and a few that do exceptionally well. The goal is not to pick the best and the brightest and have the only one. I'm not even worried whether I outperform or underperform the market, because my goal as the rotation continues is to be in these defensive things that really don't do a lot, even if the market just goes sky high and everything else. That's my goal, and why I say that it's different for everyone. In terms of what I see as a trader, it looks really attractive to pick up Meta around 670 after they had unbelievable earnings and they're growing at like 24%. Like, I see that as a bargain, and I'm not delving in just because I have a really big position in it already. I see Amazon had a nice pullback, and then I even see things like, Joseph Carlson talked about Duolingo, and everybody on this channel, I don't know if you watch him, I really like him, has been busting his balls about how terrible it's done. And he's been going on and on about, and this is why I understand it. He put a very small percentage of his portfolio into it, and nothing has changed about the company since he bought it. So selling it simply because the stock price has collapsed doesn't really make sense. Now, I bought a little as well when he was talking about it, so I understand it has fallen more than in half, but just like him, it wasn't something that I put a ton of money in or a huge percentage. And while, of course, I would like every stock to go straight up, it has fallen more than 50%. Well, I looked at it this morning and saw it at $118 a share, and saw it with a really low PE for a company that nothing has changed about the company. I liked the quarterly earnings and what the CEO had to say. They seem to be growing at a rather good pace, and I thought, geez, look at it. It's got a very low PE at this point. They're growing at like 20% last quarter. I picked up a few more shares and thought maybe I'm getting it at a discount. But I also recognize it's a company I don't know a ton about, and it could have a long way to go to the downside. Maybe the AI narrative is correct and there'll be no use for these software companies, But what I actually liked about Duolingo is when I heard the CEO talk, the market hated this. He wasn't so concerned with the profits today. He's concerned about daily users. And they are growing daily users at a pretty rapid pace. Because he's like, look, I understand that ChatGPT and Google are coming out with products for free that could potentially, you know, compete with us. But as long as I get more and more people using my product every day and continue to grow that, maybe we do something other than just languages. And they already have games and other things. And the platform is a pretty good platform that people admit they really like using, and they tend to go back and use it all the time. So if the stock has fallen in half and the PE ratio on something growing at that pace has dropped to where it is and nothing has changed about the company, I see that as a good opportunity. I don't see that as a big panic mode to get out and sell it. Now, if something had actually changed within the company that changed my opinion about Duolingo, not the stock price, I would have a different opinion. If I thought, geez, they're losing customers, this guy's an idiot, I don't like the direction that they're going, sure, of course, I have no problem taking the loss, getting out and moving on to something else. Robinhood, which one of the viewers on my channel loves to talk about because I think he thinks it's going to crater to zero. You know, I was fortunate enough, I bought Robinhood a small amount in an account that's my wife's retirement account years ago when it was in the doghouse. And I forgot the password to the account. Now, the account was a bunch of risky stocks, and the goal was, well, this is an account, I'm putting little enough in, you know, kind of how I think with my son, either my wife will get to retirement age and be pleasantly surprised that got lucky and did really well, or maybe some of them go to zero and it doesn't do so well. I had no idea. I mean, we got into Robinhood below $20 a share, and it shot to well over 100, and now it is corrected. But the thing is, Robinhood is a different company that actually has decent earnings, and they're growing, and they're getting into these things like Kalshi and the others where they do these predictive markets. Now, I don't know how they made that legal. I think it shouldn't be, but that is just my opinion, not the reality. But they are growing their users and their profits and everything else. And I see this pullback as an actual opportunity if somebody wanted to get into Robinhood. This is not financial advice. Please don't read into it. But it's a company that's doing much better, and the valuation, after falling as far as it did, is getting much more attractive to me. Well, I'm not looking to get into more Robinhood. I'm just using it as an example of what I'm seeing in the market with the rotation. Now, the one thing to be careful with these types of rotations is it really could turn much worse and take years to recover and be one of those real washouts. That happens from time to time. I don't think that's what's going on. I really do think it's opportunity for people who've been looking at some of these stocks. I would just say be aware. I've seen that Bitcoin is really struggling, and what's going on with the metals. Like, there are a lot of really weird things going in the markets that I think people should be aware of and be cautious about, just in case something bigger is going on and it really is that time, because we have been frothy for a while, so who knows. I just think this time, the fact that I got so nervous and started looking at my set it and forget it account and started thinking, oh, geez, maybe I should get out of some of this stuff, tells me that maybe we've gone far enough. Now, the one other stock that I really do right now is MTN, which is Vail Resorts. It's been selling off pretty hard because they've had bad weather this year. They haven't gotten a lot of snow. Ticket sales aren't doing so great. Revenue's fallen off. But company like Vail Resorts, they have 42 different resorts. They also own restaurants and part of the properties and other things. My guess is they have seasons that the weather sucks and they don't have as many sales as they typically do. But they also sell this Epic Pass that is this annual yearly ski pass that I'm sure they generate enough revenue and they'll be just fine over the years. Maybe I'm wrong. Maybe they end up going through bankruptcy. It does happen, even when it's unexpected. But my guess is that Vail has years where they have bad weather and the sales suck. And then they have years that the weather's great and things go just fine. So I see it as an opportunity because nobody can predict the weather or control it. So I think it creates an opportunity to pick the stock up as it's been falling off and having a tough time. Pays an unbelievable dividend. Hopefully they're in the position to be able to continue to pay that dividend. I think it's paying 6%, which if I can find stocks paying a 6% yield, like I said, I buy a small percentage. I don't want to put a whole ton in, especially because if something happens that I don't see coming. You know, and somebody said, like, they talk about making guesses and whatever else. I look into the numbers. I pay attention to all of it. But, there are just some things that are unavoidable, that the information isn't always accurate. You go back in time with Archer Daniels Midland, which is a great company, but, their guy was lying about the numbers. It makes the company sell off. You just, unless you have access to know what's going on in the inner workings, there's only so much research we can do and so much we can rely on, that I think you have to trust the name and the brand and the companies and hope that the people running them are doing a good job and not making up numbers to try to keep things moving along, and that you don't run into one of those, what was it, Enron type of situations. So you stick with things where you can see, like, part of why I like Target so much is you drive past the parking lots, you see that they're busy, walk inside one of their stores and see how many people are in there, and they do a good business. Anyway, I hope everybody's having a great week. I hope they haven't gotten beat up too bad. I hope you're diversified well enough that you're not full tech, just getting clobbered. And I hope that you had a great, what is today? Wednesday, because yesterday was my live. Those who aren't aware, maybe eventually I'll start doing the lives on this channel. I still have my Investing with Adam K. By all means, if you find that channel as well, go watch. I'm just going to start putting up videos, kind of pushing people to try to find this one. But I do a live every Tuesday at 11 o'clock. I love the live platform. If I can figure out how to do it on both channels, I'll probably do it on both. But I'm a tech idiot. Like, as much as I like investing in tech, I don't know anything about it. I'm old. My brain, it's very hard for, old dog, new tricks. I'm not very good at that stuff. But if you can come join the live, like, I love the platform. I don't get a lot of people coming to watch quite yet, which is cool by me because at least it's a small community. I can respond to almost every comment, and make a comment in the comment section. I try to respond to everybody. I'm sure when Joe finds the channel and starts commenting, he'll attest. Like, we have different opinions, but I think I'm polite. Maybe I'm rude, but I still try to politely respond even when we disagree or have difference of opinions on where markets and things are going. Anyway, again, I hope everybody's having a great Wednesday. If you could do me a favor, maybe hit that subscribe or hit the like button. If not, that's fine. Hopefully you get some enjoyment and some good information from the videos. It doesn't matter to me one way or another. It's just my place to be able to yap and discuss my ideas and hear them myself. Have a great day, and I'll talk to you guys soon. Bye-bye.